Hello, I'm Matt Schwartz with Schwartz Insurance Group, based in Louisville, Kentucky. Here again with another of our video education series focused on employee benefits. The purpose of our series is to teach you about the basics of reform and other benefit concepts. Second, to share the latest ideas and tactics that employers are using to be successful. And finally, to position you to be a pro with regard to your benefits, communication, and culture. So we've talked about the fact that a lot of changes took place starting in 2014. And what I want to focus on today is something called the employer mandate, officially employer shared responsibility provision, more commonly known as and often talked about is pay or play. And so first let's talk about who does this apply to. The law says that if you have 51 or more full-time equivalent employees, and that's based on a 30-hour work week, then pay or play applies to you. So what happens? If you have not provided benefits to your employees, meaning health insurance, there's actually two penalties that could apply. The first is a $2,000 per person penalty, which really applies if you don't provide even the minimum, what's called a minimum essential coverage. And we'll talk a bit more about it in a second. And the second is a $3,000 penalty that if you do provide some coverage, but you have folks that go out to an exchange and qualify for a subsidy and then pay for the coverage and then earn that subsidy, you actually pay $3,000 per person on that. So let's talk about when this applies. Originally slated to be January 1st of 2014 effective date. It was delayed to January 1st of 2015. And eventually that was clarified that those employers only that have 100 or more full-time equivalents will be scrutinized in 2015. Starting in 2016 is when the 51 to 99 set is going to be scrutinized. So let's talk about an example. I have 130 employees and I don't provide any insurance at all. So what would happen to me in 2015 is that I would pay a $2,000 penalty on 130 folks less 80 people. So that's going to leave me with 50. So a $2,000 penalty times 50 people, that's $100,000 if I don't provide anything. Starting in 2016, just to fast forward a bit, that law says that it's 130 employees less the first 30. So I'll pay based on 100 people. So that's actually a $200,000 penalty if I have 100 or 130 folks. So the other thing, the important thing to understand is, and let me shift to this, there's a way, one of the ways to solve this issue, you may have heard about a concept called a skinny plan. So a skinny plan officially is minimum essential coverage. And the law basically says that if you provide really any health insurance to your employees, so that could be literally just a preventive care only plan, no hospital, no doctor, no really major coverage at all. That's minimum essential coverage. That would eliminate the first penalty. So you would not have to pay the $2,000 per person penalty at any point. But let's assume that you provide some sort of coverage, but that coverage is not considered either minimum value, and the law defines that as being a 60% actuarial value, or it's not affordable to your employees. And again, the law defines affordability as being if that coverage costs an employee more than 9.5% of their Box 1 W-2 income. So that's single plan, an affordable plan, or a minimum value plan. If that costs more than 9.5% to an employee, that's unaffordable. If one of those employees who has an unaffordable or non-minimum value plan goes to the exchange, buys a plan, earns a tax subsidy, and then pays for that plan, then the employer just generated a $3,000 annual penalty. So, a lot of moving parts with regard to this concept. Very important concept, gets a lot of press. Certainly we are happy to answer any questions you might have about it because there's detailed instructions on how to determine whether you about what size you are and when this penalty applies. So number one, I welcome questions or comments about today's topic. Certainly would love to hear your suggestions on any future topics. And again, if you have any specific concerns about this situation, let us know. Again, I'm Matt Schwartz with Schwartz Insurance Group in Louisville, Kentucky. Look for the next in our video education series and how you too can be a pro with regard to your benefits, communication, and culture. Thank you.